In this world, there are more than 3 billion people that are called unbanked. There are hundreds of blockchains. There has to be something that unifies the entire infrastructure and payment systems.
The world's third largest cryptocurrency behind Bitcoin and Ethereum is Tether. With a market cap of more than $100 billion, Tether is a stablecoin which is tethered to the US dollar. I'm joined by the so-called hardest working man in crypto, Tether CEO Paolo Ardoino, who is joining us from the Token 2049 conference in Dubai. Paolo, can you describe the role of stablecoins in the crypto ecosystem?
Yes, Pamela. So stablecoins are, I think, evidently today, the most important use case for the blockchain technology, apart Bitcoin. Bitcoin was born in 2008, first block mine in 2009. Since then, we have seen many projects on blockchain, but the only one that had real world adoption and today and reach hundreds of millions of users globally is the stablecoin industry. Let's put a dollar, so that most used currency in the world, on top of blockchain, the best innovation that technology and finance created in the last 3 decades.
On any given day, Tether makes up the lion's share of trading volumes on the crypto market. Can you talk us through why Tether is such a highly traded asset?
Well, Tether grew to be the most trusted and used stablecoin across the world. Every single cryptocurrency exchange has integrated USDT, has USDT-based trading pairs. It's important for the cryptocurrency community to have one common denominator. Right? There are hundreds and hundreds of different cryptocurrencies. There are hundreds of blockchains, but there has to be something that unifies the entire or offers like a common layer, common transport layer as well for liquidity. And when you see also situations like last year in 2023, one of our major competitors had an issue where they were keeping an important sum of money, around $3 billion, in uninsured cash deposits in Silicon Valley Bank. You could see that Silicon Valley Bank and many other banks in the US, alongside with Credit Suisse in Switzerland, failed. So more and more people are becoming sick and tired of seeing how banks are acting with their ability of doing fractional reserve.
And can we look at, let's say, geography? Where are Tether's customers or users coming from? And can you give us some insight about what this means in terms of Tether's value to these particular people?
I don't think stablecoins are used in Europe and the United States. I know that. The reason is that both Europe and United States have the best banking rails, has everyone, well, almost everyone there. The US population was able to borrow or to take loans up to $1 trillion in this moment. So that's something that, of course, they cannot do with a stablecoin, because a stablecoin, you cannot withdraw more than what you have in your wallet, your stablecoin wallet. And in Europe is the same. If you go around Europe, the vast majority of people have bank accounts, great financial rails. In this world, there are more than 3 billion people that are called unbanked. These people are, great people. They are not bad people, right? But they are just too poor to be of interest of the banking industry, because they make their average salaries between $100 and $300, $400 per month. So they don't have big savings. They don't make a lot of transactions. So the banking industry is not interested to them, because it would just represent a cost for them. And but these people need to be included in the financial system, need to have access to payments and fair payments. When a person working in a foreign country send money back home, it's pretty common for many countries that represent up to 10% of the GDP on an annual basis. But there are companies from the traditional financial world that are charging between 10 and 20% for every single transaction. Imagine a person working in Europe that needs to send back home money into Philippines. This person worked really hard in Europe for an entire month, and just these companies, to make just a small change in a ledger, in a centralized database, are charging 20%. to the hardworking person. How unfair is that? So that is what Tether is solving, is creating a new opportunity and for all the people living in emerging markets and developing countries to have a fair access to a global economy and avoid to being screwed, sorry for the term, but avoid to be screwed by the old intermediaries that are today present still in the traditional payment industry. And also, we talk about the unbanked, there are around 3 billion people, but there are also the other important number is 5 billion people that are living in countries that have high inflation and a weak currency, of course, compared to the US dollar. So the common story in all these countries, across all these communities, across billions and billions of people, is their interest of having access to the US dollar. The US dollar is not very present in those countries unless it's in the form of cash, but no one today wants to hold cash because it's dangerous as well. So people are, they use smartphones, they are used to have smartphones nowadays in their pockets, and so today they have the ability to keep dollars directly in their pocket.
Stablecoins perform a different function to their peers in the crypto sector. They can be used for cross-border payments or even to buy things like a morning coffee. How much is Tether being used as a mechanism for cross-border payments?
Today, we account more than half of the usage of USDT for actual payments and for day-to-day live usage by normal people, not people in crypto, but people that want to trade the next meme coin, but people that have real-world problems. They need to purchase goods, they need to pay for things. If you look at Argentina, for example, in Buenos Aires, go around and everyone is using USDT. You can pay with USDT in taxis, go to their hairdresser, anything. The reason, for example, there is that the Argentina pesos lost 98% against the US dollar in the last 5 years. Go to Turkey, the Turkish lira lost 80% of its value against the dollar in the last 5 years. And in Argentina and Brazil, for example, both Argentina and Brazil recently, end of last year, had independent reports. I think the Ministry of Economy issued in their reports saying that USDT accounts to 80% of the usage of digital assets within their countries, so 80%. So the reason is not because all these people are in those countries are willing to trade meme coins. They are subject to enormous pressure. People that work in there, they work the entire year, but at the end of the year are poorer compared to the beginning of the year. Because if you save money in the local currency and you have, the vast majority of the goods in the country are imported from the outside, all these goods are imported based on dollar cost, right? So if your local currency is devaluating really quickly against the dollar, then although you have a bit more money in your local currency terms, with the huge inflation, you are poorer in the end.
The collapse of another stablecoin, Terra USD, and its sister token, Luna, that caused volatility in the market when it depegged in 2022. How sure are you that this won't happen to Tether?
So the $7 billion of redemption in 48 hours was exactly after the Terra Luna event. Publicly, Tether was attacked. There were different hedge funds that publicly said they would short Tether to cause a bank run. They tried, because that worked with Terra Luna, but it didn't work with us. So in 48 hours, $7 billion were accounting for 10% of our reserves. 10% is a really interesting number, because you might know that banks are allowed to do fractional reserve, and they're allowed to lend out up to 90% of their balance sheet. So it means that you have only 10% of liquid reserves. So that's why 10% was an important number for these attackers to try to kill Tether. But Tether was able not only to redeem $7 million in 48 hours, but also more than $20 billion in 20 days. That was 25% of our reserves. In 2008, a bank called Washington Mutual went belly up because they had 10% of redemptions. Silicon Valley Bank, Silvergate, Signature, they all were subject to bank runs and pressure from the market. So these hedge funds tried to do it with us, but they found a wall, because in the end, you can account that the stablecoin now has around 105% of reserves. And imagine that a bank usually has only 10% of reserves.
Thanks, Paolo. Now let's check in with our resident economist, Alex Holmes. Alex, it's not uncommon for fiat currencies to be pegged to the US dollar, so it makes sense that cryptocurrencies are pegged as well.
Yes, Paola, the pegging of national currencies dates back to post-World War II and the so-called Bretton Woods Agreement, which was negotiated in July 1944 at the United Nations Monetary and Financial Conference in Bretton Woods, New Hampshire. Under the Bretton Woods system, gold was the basis for the US dollar, and other currencies were pegged to the US dollar's value. While the system was ended by President Nixon in the early 70s, the concept of US dollar pegging remains. Many smaller countries peg their currency to the US dollar so that they can participate in international trade. It's a way of keeping their currency stable. Hong Kong, for instance, fixes its currency against the US dollar. Singapore, where I am now, manages its currency against a weighted basket of trading partner currencies. Many countries also peg their currencies to the euro. But these pegs aren't infallible. If a central bank doesn't have enough reserves to defend the peg against speculators, then it can become untenable. And the breakup can be messy. Just ask the UK, which crashed out of the European exchange rate mechanism on Black Wednesday in 1992. But coming back to crypto, stablecoins in the crypto ecosystem aim to perform a similar role to currency pegging in the global fiat foreign exchange market. That's what's perhaps interesting about the cryptocurrency sector. Much of the mechanics of how the markets functions have been drawn from lessons learned from the economics and the study of how markets have evolved over time. Though, as with the legacy financial system, things can get messy if coins ever break their peg.
Thank you so much, Alex. Paolo, you're from a small town in northern Italy. How different is your life now compared to where you started? Is there anything from your simple beginnings in Italy that you've brought with you into how you approach managing now a $100 billion crypto company?
Well, I think no matter how big we are remaining, all of us, the same people. So we are simple people, humble. I come from my father and, well, my parents and grandparents had a farm. They were cultivating rosemary, sage, tomatoes, and producing olive oil, something that they're still doing today for, of course, not big production, it's just for family and friends. So I love always to go there and unite with my family. I like to, my life is all about working, and so I'm not a big fan of super fancy things, and so I think we as a company were happy when our stablecoin was, a few $100 million. We started with a simple idea, and I think we exceeded our expectations in an enormous way.
And you are a tech guy. You love technology. How do you balance the drudgery of managing a company versus being at the forefront of creating new technology?
I started coding when I was 8 years old, and I really love coding. Initially I thought when I was young, oh, I will never stop coding. Still today, I still manage to do a little bit. I believe that for someone that needs to always understand the technology over, and the very fast changing technology. We are seeing how AI is changing many things today. I like to see ideas happening and being starting from 0 to 100. We have so many projects in the pipeline on all the 4 pillars: finance, data. We have power, that is, well, our renewable energy, and Bitcoin mining arm, and education. We have great teams looking at how with technology we can disintermediate many user interactions. Everyone in this world is building technology for the best case scenario. So when the world works, everyone is happy and friendly with each other, everything works, of course. But we have seen, and also recently we have seen, how things can change rapidly, and we don't know where the world is heading. So we need to be in a situation where technology is built for the apocalypse in a way, right? So that's how I see things as my nerd sci-fi passion forced me to do that, like how we can, from the education, energy production, communication, and finance, how everything can be built for the worst case scenario rather than the best case scenario.
Let's shift gears to AI. Tether recently invested in the EU data company Northern Data, which has a deal with NVIDIA. How does AI fit into the infrastructure vision for Tether?
Well, that's a great question, Pamela, because I think we have already seen how AI can be politicized. Humanity realized in the last 2 years that AI is set to completely change this world. Do we really want to have only a couple of companies dictating the policy of usage of AI? And do we want them to use AI to dictate their policies and politics? So the reason why Tether invested is that in Northern Data is that we believe that the access to artificial intelligence infrastructure has to be actually open. So for us, it was normal to look first at the infrastructure part. Tether USDT is infrastructure. What we are doing with education, Bitcoin mining, is all about infrastructure, because that is, if you don't have strong fundamentals, you cannot build a strong industry and an open, more resilient industry. So that's the investment in Northern Data. It brings us the ability to provide services and access to good AI projects all around the world and make it more AI more decentralized.
And how do you see the impact of AI on the crypto market more broadly speaking?
Well, that is kind of tricky, because we have seen many crypto projects piggybacking on the AI brand. It's it's kind of normal for, unfortunately, for the cryptocurrency industry always to find or attach themselves to buzzwords in order to create hype. But as for sure will happen, then good projects that are mixing crypto and AI will thrive. So I think one of the most important concepts is that AI has to become decentralized. AI has to become local. The issue that I have with the current setup of AI is that no one was in the past putting their private medical bills on Facebook and share it with everyone, or sharing with Facebook. But today, people are uploading on ChatGPT their private medical data to have a summary or a second opinion instead, because they don't trust enough their doctor. And so that is extremely scary. I think that the world needs to work on local models that can run on the local computer, can learn everything from the person, but not share anything with the outside.
And let's talk about the Bitcoin halving event. Historically, halving events have pushed up the price of Bitcoin. What are your predictions this time?
Well, I'm not a big fan of the correlation of Bitcoin price and Bitcoin halving. I think there is the beauty of the Bitcoin halving is, to me, is that it's a clock. So every 4 years, we know that there will be an halving, and for the next 100 years. So the beauty of it is that it's something that was created with Bitcoin. 2009, the 3rd of January, the first block was mined. And since then, we know that there is immutability. It's like, I think it's almost like a physics law, like a law of the universe. You know that you cannot change these laws.
The crypto market in general has undergone a few so-called crypto winters. Right now, it looks like it's spring. Are we done with winter? Will there be a summer?
Even Bitcoin in this moment is exempt from being subject to all the geopolitical events that happen around us. But I believe that with the Bitcoin ETF, of course, we are seeing more purchasing power. One interesting point is that I think Larry Fink from BlackRock was saying that the interest in the Bitcoin ETF came mostly from retail. And this should be something that makes us think. Means that while we were expecting a lot of institutions to already jump in the Bitcoin ETF, actually there is an enormous amount of people that wanted to buy Bitcoin, but they were waiting on the sidelines to buy Bitcoin. It's more common for people especially in Europe and the US, to have a banking app on their smartphone rather than having a cryptocurrency exchange application. So all these people that didn't have the time to properly or to fully focus on the complexity of registering to a cryptocurrency exchange and to go through and choosing a cryptocurrency exchange.
Can Tether become a ubiquitous cross-border payment method, and could it eventually replace the likes of Visa or MasterCard?
Visa and MasterCard have huge fees for merchants, and they are thriving, they have been thriving thanks to their monopoly of infrastructure and payment systems. But I think it's clear from the start of humanity that technology is there to destroy monopolies. So technology, when there is a good idea and when people are in need, they will always find a more efficient way. They will be more and more adopted across the world because people now have an option. It's just a matter of time they will take it.
Thanks, Paolo. A big thank you to our special guest, Tether CEO Paolo Ardoino, and our resident expert economist, Alex Holmes. Thank you both. Thanks for tuning in to episode 8 of I See Your Trade Season 4. I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Thanks for joining us today, and remember you can watch and listen back to the episodes from the past 3 seasons on Spotify, Apple Podcasts, as well as YouTube. See you next time.